All right, it's Monday, August 17, 2020, and here's a quick look at the US national real estate market with the Altos Research data that came in over the weekend. If you're new to Altos and these videos, Altos Research tracks every home in the country, about 100 million of them. And each week we analyze every property for sale for pricing, changes, supply and demand. We compile all those details into local and national analytics for thousands of realtors, brokers, institutions around the country to use in helping their clients make informed decisions. And it turns out that this time that information is particularly critical. Everything is so crazy. Let's look at how crazy it is right now. We're down to just 601,000 single family homes on the market for the whole country. This is half of what a healthy market would be. The top chart here illustrates how dramatic the shortage is right now. The bottom line is Americans are buying everything in sight. There have been a lot of headlines in the past week of spiking inventory in places like San Francisco and New York, creating perhaps buying opportunities for the first time in many years. So this is true, especially in condo inventory. And prices haven't really adjusted yet, and it'll be fascinating to learn when the smart money starts to see bargains and starts buying again. The data is not yet showing that signal. Next spring, I expect. We know this is buyer demand because each week, when we measure the new inventory, the properties coming to market in a given week, we're at about normal levels. This week, 71,000 new listings came to market. You can see in the bottom chart, 70, 80,000 new listings in a given week in the third quarter is about normal. Our available inventory is shrinking because more people are buying than new supply coming to market. Prices this week are basically unchanged at $354,990 because in a normal year, prices peak at about June 30th and then pull back in the fall. Normal years are pulling back now, so all of a sudden we're up just about 8% year over year, which is crazy high. You should see some of the traditional measures of home values in the headlines in the next month or two to show acceleration from about 5% year over year to 6, 7, 8% as they catch up with the real-time data here. So look for those bullish pricing headlines to be visible in the next few months. This pricing number is going to be very sensitive to interest rates. So keep your eye on rates as policy and global economy change in the next few months. When we look at the leading indicator of the prices of that newly listed cohort, the ones coming to market each week, you can see that we're ticking down now weekly. This is seasonal and healthy. So remember that this number is the wisdom of the crowds measurement. In aggregate, home sellers and their realtors know exactly where to price homes so they sell. So the house gets listed now, it gets an offer next month, it closes in October, and then you'll start seeing the traditional sales data for these numbers in November. But you can see it right now in the new listed cohort. So we're 3 months past the seasonal peak of the new listings pricing. As you know, demand didn't back off at all like it normally would in the second half of the summer. So, but you can extrapolate this line down towards the right, towards the end of the year. In December, properties coming to market should be about 275, significantly higher than recent years. So the story is the same as it has been. Inventory is super tight, prices are high, though not continuing their spring climb. We're at seasonal peak and feeling like staying robust at that point. So as always, visit altosresearch.com for full details and the latest data. Subscribe to our YouTube channel to make sure you get these videos and other videos that we're putting out each week. Please post questions in the comments if you have a view on the market that you'd like us to explore. More next week. We'll see what's then.